Hi everyone, welcome back to Be Rich. Today I want to give some advice for people in retail business, people who are doing retail business or thinking about venturing into retail business. And it's applicable to all businesses. So if you're someone who's into business or thinking about doing business, maybe this video will be something of use to you. So what am I going to talk about today is something known as income statement for businesses. If you're into business, most of us, if you start business like how I did, you just come up with an idea. I want to do this. Then you start thinking about how can I do this? And if it's something like an event business, you'll think, okay, how can I get some events? How do I go about it? Talk to someone. One thing which you all forget critically to do is look into the finance of the business. Are you really profitable in your business? You just start doing business because you loved doing business, and before you know it, you're 1 year into business, and then you have to file your taxes. Then you realize you've not kept any of your papers in order, and you really don't know if you're profitable in whatever you're doing. So if you're doing business already, please try and implement this, something known as an income statement. If you're planning to start business, try and incorporate this from day one so you know if your business is making cash flow. Is it cash flow positive or negative? First thing, an income statement is something known as revenue. Revenue comes from sales. You have two types of sales. One is gross sales and net sales. Gross sales is totally unadjusted to the income. That means it's just purely on money which the product or the service is generated. Two is net sales. Net sales is minus the sales returns. That means allowances, discounts. So it reflects a net sale, which is actual revenue earned by the retail business. So understand this. We have two concepts. One is known as gross sales. The other is known as net sales. And the difference between both is gross sale is what is unadjusted income to the retail business of yours. Net sales is when you take out all the discounts and overheads and this and that minus the sales returns. That is known as the actual revenue which is being generated for the retail business. The second thing which you should think about and know about is cost of goods sold. COGS, it's called. This represents the direct cost attributed for the product or the goods or the services sold. So typically it includes the purchase price of the goods, transportation cost, and direct and indirect labor cost involved in bringing that merchandise to the store and making it sellable. So some of you are distributors, some of you are manufacturers and sellers. So that means the total cost from sourcing all the raw materials to making it, if you're a manufacturer and selling it, if you're, let's say, running a shoe shop and you have a unit and you're making shoes and you're trying to sell it in Chennai, this is what you should keep in mind. What is the net cost? It includes everything. If you're someone who's into, let's say, reselling, you're a dealer or a sub-dealer. So what do? What is the cost of the goods transferred to you? Then the cost of transporting it, bringing it to your showroom, keeping it in your showroom, trying to sell it. So this is a cost of the goods sold. This is an important number to know, and there are various components to this. So you should analyze this and not just brush over it on a broad stroke saying, okay, I think approximately it will cost me so much. No, you should have actual numbers you can track and know. You should get the numbers as real as you can so you know where your true cost for the goods sold is. Gross profit. This is a calculated net sales minus the cost of goods. So you have the sales after discount and everything put together, you have your sales minus the cost of the goods sold. That gives you your gross profit. This effectively tells you if your business is right now making money and if your core operations are being funded. So this is what gross profit is. The most important part is operating expenses, which is what I want to spend some time on because there's two parts to operating expenses. One is known as a selling expense. The other is known as general administrative expense or G&A. Selling expenses is a cost directly related to selling the product like advertising, sales staff salaries, and store rent, utilities, and store supplies, power supplies, utilities, and all that put together comes as selling expense. That's the cost of selling. The other expense, which is part of the operating expenses, is general administrative expense. Those are the overhead costs not directly tied to selling, such as office supplies, salaries of non-sales person, legal and accounting fees. All that comes under general administrative expense, G&A. The next one is operating income. This is calculated by subtracting the operating expenses from the gross profit. So you have your gross profit, which you have calculated now, which I'll review, which is net sales minus the cost of goods, which is your gross profit. From the gross profit, you remove the operating expenses. That gives you your operating income. So this should be also positive. This means This is before accounting and interest and taxes. This shows you how efficient your operational of your business is. Next, which we comments to known as the other income and expenses. This section includes revenues and expenses not related to core businesses. So this could be interest income for your business. You have some money sitting in your account, or you've made some investment, and interest from expenses, gains and losses. So all these things from your asset sales and one-time items which you might have bought, all this is plugged into this, which is also an important part to know. Now we get to the interesting part, which is the earnings before interest and taxes, which we've seen in a lot of balance sheets, and we talk about it when we're talking about analyzing companies. This would be your earning before income, interest and taxes. So this is calculated adding the other income or minusing the other expenses which we spoke about. This shows you how profitable your business, retail business is. And this should give you what is going to be taxed on. So from here, you have to take away the interest expenses, which is the cost incurred due to any funds you have borrowed. So some of you might have taken loans to do businesses. So all those interest costs are removed from this. And any other borrowings for you might have while financing the inventory for purchases. This gives you pre-tax income. So on this pre-tax income, you have to calculate your tax. Once you have arrived at your tax, which is to the government, whatever, depending on the kind of retail business you're on, where you are and how your business is structured. Once the tax is calculated and you remove the tax from this, you finally get your net income. Net income tells you if your business is actually making money. Realize you have taken the cost of the business, cost of all your employees, cost of the goods and everything. Finally, this is the money which you have made. And you need to know this. If you only know this, you will be able to understand business is making money. You might have a great idea. You might be doing very well. You might be having a lot of people coming and buying stuff from you. But you need to know if you're making money or you're bleeding yourself dry. So this is the main reason why lots of shops come up in Chennai and they disappear overnight. You'll see them for 6 months. You'll see a certain area, commercial area, you'll see shops going in rotation. 6 months, shops will keep changing. The reason why they're changing every 6 months is because they do not work on this, which is their income statement. So if you are doing business, please try and work this. If you are thinking about business, do this from day one. And I thought I'll share this bit of knowledge with you, especially to people who are interested in business and or doing business or thinking about doing business. Is something to focus on, because a lot of you thinking about doing businesses who want to freelance and move out, this is something very important to keep in mind. Thanks for watching the video, and I'll see you in the next one.
Copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.